India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Wednesday morning. We are coming live from the CNBC-TV18 Motilal Oswal studios, and it's all boys session here today for the next two and a half hours. I'm Prashant. With me, my colleagues Nigel and Mangalam is with us today. Guys, hi, good morning.
Good morning. It's an all-boys gang. It's a Wednesday, and the good part is that Friday is a holiday, and it's a truncated week this week, and the next week is a truncated week with our responsibilities. We have to go ahead and vote.
Well, and the queues are not looking too good,
Exactly.
and it's the 13th. Will it be lucky, or will it have...
Thankfully, it's Friday. It's
Wednesday the 13th.
Wednesday the
Not Friday
13th. But it's the 13th. Maybe since it's not Friday the 13th, could be lucky. Let's
Bad
see.
vibe day.
Let's
Anyway,
see.
I mean...
Don't worry, I'm wearing a black shirt. The nazar goes away.
Anyway, I think, the queues aren't stacked up in a very positive way, and that has been true for the last couple of days, and that is true this morning as well. And I think the big problem, which we sort of were talking about all day yesterday as well, was the relentless rise in the US dollar. So, same time yesterday at 8 o'clock, we were talking about a 0.45% gain in the dollar. Then as we opened trade and Asia started trading during the day, the dollar index went up 0.25%. And this morning, we're waking up to another 0.4% gain. So it's just an absolutely relentless sort of dollar rally. And we are now near the 106 odd mark. And I think that's the sort of red light flashing as far as emerging markets are concerned. 10-year yield in the US, not starting with equities, but dollar and yields, of course, a 12 basis point jump. We're at 4.43%. I mean, that's a big one. And of course, I mean, both the dollar and the yields being driven by focus on what will be the shape, size, etc. as far as Trump's tariff regime is concerned. Tariffs are a given. How large, who will be affected, and of course, what will it do for US assets, I think is the big question. Just one point in terms of levels for the dollar. I mean, we're approaching the 2023 and 2024 highs on the dollar index, 106.52, 107.35. It's just that the dollar has moved so quickly that those levels starting to appear in view very fast. US equities, well, they ended the post-election winning streak, but small down. The S&P was down a quarter. Nasdaq was absolutely flat. Amidst all of this, of course, what is also not helping is the fact that everything else around the world is seemingly doing very poorly. Take Europe, for example. And I'm just putting this out also because I spoke about the dollar index. A large part of the dollar index is made up of, it's basically dollar against a basket of currencies. And the biggest weight there is for the euro. And look at what's happening with the largest economy in Europe. Germany's ZDW index, which is basically a business conditions index, that fell to sub-90 levels. It typically falls down to those levels during sharp contractionary phases. And that is essentially the reason why, I mean, the dollar, the US is doing well. The core interplay in the US, of course, is an economy which is starting to pick up pace, and a central bank, that is the Fed, which is very inclined to keep cutting rates. And compare that with the setup around the world, and I think it's no wonder that you've got the US doing so well. Later tonight, you get the US CPI numbers, and I think that could be meaningful because, I mean, especially US equities have done so well. They are so stretched, at least in the very near term. If you get a big number and yields go up once again, I mean, I think it'll be difficult for equities to sustain with yields being very, very high. Those are expectations on your screen as well. We got so many new appointments from Trump. You got the border guy. You got this morning, of course, you got the appointment of the Department of Government Efficiency. Elon Musk is going to be part of it. Vivek Ramaswamy a part of it. But from a market perspective, who will be the new US Treasury Secretary, I think that will be the key. And I think we should not have to wait very long because they're coming in thick and fast. Now, here in India, yesterday we got the CPI number, the inflation number, and that came in at about 6.21. We'll talk more about this. Rate cuts will have to wait, most definitely. So, again, a lot of people are starting to talk about how the fiscal position is tight. And of course, the monetary position also seems to be tight with no rate cuts in sight for a while. And that's a problem here, at least in the very near term. Just to sort of tie in the levels here, supports for the Nifty, 200-day moving average. By the way, if we are able to hold around the 23,800 odd levels, which essentially has been the low recently, that'll be great. And I mean, the ideal situation is we bounce off these levels. But below this, you're essentially looking at the 200-day, which is 23,534, and then 23,190. 23,190 is the 61.8% retracement of the entire rally from the election low to the all-time high. And of course, for the Nifty Bank, similar levels will come up. The supports are basically around 50,500, 55.33. It's a channel support. As I said, the overall mix isn't looking all that great as we start. Hopefully, I mean, just because of the fact that the market here has come off quite a bit, we sort of we're able to take it well, and it's not a slam dunk in that sense. But that's the only silver lining at this point, at least this morning. GIFT Nifty will come up on your screen, and it's indicating another 60-odd point cut on that index. That's the start, which is being indicated. Mangalam.
Absolutely. The hope of a silver lining after a big drubbing is what we have right now. Let's see whether that continues or not, because yesterday we ended at the low point of trade. Yep. For first half of trade, we were absolutely fine, just meandering around the flat line. Thereafter, the indices ended at the low point. And then in the evening, we got the data that came in as well from the inflation part. Everyone's speaking about that right now. We'll talk a little more. The actual impact on higher than expected inflation would be on two fronts. One, the FMCG index. We've heard from all the companies talking about inflation hitting urban consumption. Will that start hitting rural consumption once again as well or not is something that we will most definitely keep an eye out on. The FMCG index saw big cut yesterday. And the second one is the Nifty Bank. If rate cuts are off the table, what happens to the Nifty Bank? What happens to the banking stocks? So those are the two sectoral impacts that we'd see on account of hotter than expected inflation. The other reason why the markets fell yesterday was the FI selling picked up a little in the cash market and the DII buying went down a little bit. So that made the net flows a little wider than what they were in the previous trading session. So if you look at the FII selling minus the DII buying, yesterday that net gap was close to around 1,200 crores. The previous trading session, that was about 280 odd crores itself. So that put a further pressure on the market itself. The only thing to watch out for, like you've been pointing out, and I'm sure Nigel will talk about that as well, are we looking at a support or a bit of a sentimental bounce as well from current levels? Because over the last three trading sessions in this month itself, the Nifty has bounced back from 23,800 to 23,850 sort of zones. The other data point is the put-call ratio, which is at 0.72, indicating oversold levels as well. Were we to break this, then all eyes back again on the 200-day 200-day moving average. The only couple of things that I'm tracking from a micro standpoint would be the Swiggy listing, because, three things to watch. One, the subscription was slightly tepid, so at just around 3.59 times, led entirely by QIBs. At what discount does it settle to Zomato? We know the financial differences, but from a valuation standpoint, the 390 rupees is the issue price. At what discount does it settle at is something that we will most definitely track. And the second one I'm looking at is Godfrey Phillips, because yesterday, post-markets, they uploaded their presentation, and the cigarette volume growth, we're talking about FMCG volume growth being in low single digits, most time negative as well. They reported a cigarette volume growth of 30.5%. That's higher than every other company by a mile and higher than their own history as well. And over the last 9 or 10 quarters, not that I remember, 30.5% cigarette volume growth. The previous quarter was 26%. And if you compare it with ITC, over the last many quarters, they've been outperforming the industry, gaining market share. That's reflected in the stock price as well. But the stock in the very recent past has corrected about 20% from the 52-week high. So where that goes is something I'll be watching out for. But over to you, Nigel.
Well, not too healthy for the smokers, but I guess good for shareholders.
Good for shareholders, let's put it that way.
Today's the 13th. And in fact, in yesterday's trading session, you had the Nifty that ended at multi-month lows in yesterday's trading session. A quick point before we get to trade setup. For the last few years, everyone's been spoiled for choice, and you're getting used to returns 15, 20, 25, 30%. On an average, equity should give you returns of close to around 14 to around 15%. That's a very, very good compounded rate if you have to look at. So now with this sort of a fall, keep the faith going, keep the SIPs going. It was good to see in the last month. Just keep that going. Let's tell you the reasons for yesterday's fall then. The institutions, yes, they sold in yesterday's trading session close to around 1,200 crores or thereabouts. And the FIs, they added net short positions by close to around 10,000 contracts. The pain point, is the dollar index. That's holding at around 106, which is the highest we have seen in the last 4 months or so. And I'll tell you what, there's a strong case for the FI selling to reduce and the FI flows to resume actually. But this is the pain point. You need to see a decline out here. The 106 odd mark is, the very, very uncomfortable level. So once this cools off, I think there could be a bit of a cooling off in that FI selling that we have seen. The Chinese stimulus really hasn't lived up, and the FIs have been selling, non-stop for the last month or so. Will the 23,800 mark be lucky yet again? The last few times we've gone out there, we've seen a bit of a bounce, and these are the recent lows in the month of November itself. So 23,800 becomes a very, very important point on the downside. A couple of quick technical levels then that suggest that we could see a bit of a bounce from the lows today. One is the PCR has moved to the lower end of the range. Normally we see it bounce off from around 0.65 odd. It's at around 0.7. The other factor is the FIs are net short with close to 1.8 lakh contracts on the short side. And the clients, they are diametrically opposite. They have more than 2.5 lakh contracts on the long side. So that's a couple of points that you should note as well. The call writers, they are having a big party out there. 24,000 call, 24,200 call. Both of them have seen a fair bit of open interest build up, which is telling you that the call writers, they are getting very, very confident. So what are the levels you need to track? The 23,800 mark is the line in sand, important for today's trading session. If that breaks, then you're looking at the 200 DMA that comes in at around the 23,500 odd mark, and you'll feel confident about the Nifty rallying further, only once we get past that 24,300 odd mark. Till then, the market could remain a little bit skittish. The Nifty bank sold off yesterday, and the way HDFC Bank fell, that was a bit of a worry yesterday, though it's continuing to hold onto the lower end of its range. That's the 50 DMA. You don't want to see HDFC Bank break that 1,690 to around 1,700 mark. In yesterday's trading session, it broke the 20 DMA. So the bulls need to turn to someone. HDFC Bank needs to stand up. So let's see whether or not we can bounce off that gap down that we're seeing on the GIFT Nifty right now.
All right.